So it's good to see so many of you joining again with us today for I think it's for our fourth or fifth time covering a lot of this material and just adding to it as the government provides more detail to us. I will pick out, as Rose is saying today, questions that are relevant to the particular section that we're in, and I think are relevant, and Rosie thinks are relevant to the whole group as we go through. Now, the goal of today is to have quite a fast whistle stop through, and as a reminder of the various different government schemes that are available to us, and to add to each one the new information that has come out. There's been so much new information coming out through the various different channels, both in the media and through the government's formal channels on most of the schemes, and we want to update you on the things that we think are relevant and important for our client base here today. Ravi's joining me again and to bring in some insight from where we're advising clients on a few of these, and so some on the ground information. Okay, so we're going to cover quite a few topics. So we'll look at the job retention scheme, the self-employment version of that. We'll touch very quickly on the cash grants. That's the 10K grant and the 25K grant that are targeted at the hospitality and retail sector. We'll talk at a bit more length about the loan scheme, as that's a particular area where more information seems to be coming in. The government are revising what they officially put out as a scheme. We'll again mention the tax rates holiday, talk about some of the deferrals of tax payments that are available to us, close it up with the other support, and we'll focus a bit of time on landlords at the end. So the job retention scheme. So, or as what's getting known as the furlough scheme, as everyone's working out how to say this word, furlough. That's now appeared in our repertoire out here now. So just the quick overview. So the furlough scheme is a grant scheme. So remember, these are not loans by the government or amounts you have to pay back. These are grants by the government, where the government is saying we're going to pay your staff's wages. The grant is going to cover up to £2,500 of your employer's wages, so it's 80% or £2,500, whichever is the lower. Plus, now they're going to top that up with the employer's national insurance contributions. This is your NI that you pay as a business on top of the wages that you pay out to your employees, and also the pension contributions that you as an employer pay out. So this will be at the statutory minimum, which I believe is 3% at the moment, and no more. Now, the workers which this will apply to are these furloughed workers, and we're all getting to grips of what a furloughed worker actually is. Now, the clearest definition is it is those workers that have been told to be temporarily absent from work, and absent means not undertaking any work for you whatsoever, and this has been clarified to include not even training. So particularly relevant for professional services firms or firms where they've got particular skill sets that they train people up within their businesses. You can't just task your furloughed workers to continue their exams or study at home. They may choose to do that, but that counts as work if you're requiring them to do that. Now, this is a scheme that is not just targeted at a specific sector. So all UK businesses that run a payroll, so you must have individuals on PAYE. This will not impact those that you contract, so those that who submit invoices to you and you pay those invoices. This is for all those on PAYE schemes. And those employees must have been in your business and on your PAYE scheme prior to 28th of February. So those employees that have just recently joined, perhaps at the beginning of March, so your new hires for March, they are not included as of yet in this scheme. Okay. At the moment, the scheme is open for 3 months and will be covered from the 1st of March, March, April, and May. Okay, so it's for 3 months. Now, what we expect to happen if we do see a prolonged closing or shutdown of the country, we would expect to see this perhaps extended a little bit, but I think we can't count on that. Certainly, Ravi, I think your experience at the moment, you're not forecasting that any further in cash flows.
Exactly, not forecasting any further than the 3 months.
Okay, so so when you're cash flow forecasting your business, presume that your employees will come back onto your payroll at the end of those 3 months, regardless of what's happening with your income line.
Exactly.
Now, we're all waiting with bated breath to see this HMRC portal open, which is where we're going to apply for these grants. So it's where we don't know what it's going to look like, or necessarily what all information that we'll need to submit at that point. But a portal will open miraculously at some point, and through that you'll make your claim. Now, we haven't heard too much through the formal channels precisely when that's going to be open. On the more negative end, through informal channels, I've heard towards the end of April, which is quite worrying, as the government has said we're hoping to make our first payments at the end of April. And the April payment will cover March and April, but your May payment will be paid in May. Now, so what have we been learning here? So over the last few weeks, in particular, one that caught my eye was a complete U-turn on some decisions that were made last week around being able to pay out against what we're calling discretionary, or have been described as discretionary commissions and bonus payments. So these would be those commissions perhaps paid by an estate agent to their agents or a sales team. It could also include overtime that's owed and usually paid to individuals. Last week, we were told that these are not going to be included in the scheme, which was a worry for many of our sales-orientated and estate agent type clients. And then I think it was yesterday. In fact, it was on Monday where a complete U-turn happened. Presumably, there was a lot of lobbying over the weekend, and that was removed. And the wording has been inserted that compulsory payments of commission and bonuses can be included in the furlough scheme. I personally expect more detail to come out to clarify this, as a compulsory commission bonus doesn't appear to me as a legal definition. It could be interpreted in different ways. At the moment, I'd presume that if you had a sales team with contracted commissions that you get, so most of their salary was perhaps made up of a commission, then that would be included in the scheme. Another question that we've had in a few times was that what if my employees want to take other work while they're on furlough, can they do that? And our previous message was from the guidance we read was, no, you can't. If you're on furlough, you can't take other employment. It appears now that the government have clarified is that as long as you contractually able to do so, then you are permitted to take other work from another employer while still being included within a furlough scheme. Now, I expect this most likely to happen where perhaps you have teams of shift workers. Perhaps you run a restaurant or a pub, and you've got some part-time workers that picked up 1 or 2 shifts a week that are now being made furlough, and are also then looking out for other opportunities, perhaps at the supermarkets, which are trying to recruit new teams to help them deal with the increase in load that they've got. The answer for those people now is, yeah, they can take that other work as long as they're contractually allowed to do so. And what we mean by contractually allowed to do so is, does your employment contract allow your employees to take other work during normal work hours? So if your contract says during the hours of 9 to 5, you may not take other employment. That employee couldn't, presumably without getting the permission from you as an employer, take any other employment during that period. It's also worth mentioning as well, we're getting a lot of questions around how do I actually furlough my workers. So what is the process, the HR process that I have to go through? We've been speaking to many HR advisors, and we hope eventually to get an HR advisor onto one of these calls to give you their particular insight. But the basic rule applies that you need to check your contracts first. So many employment contracts include terms around the ability for the employer to temporarily reduce or lay off a worker for a period of time. And if you have those clauses within your employment contract, which gives you the power as an employee to employer to make these decisions, there is very little you need to do in terms of getting consent, where you don't need to get consent for your employee, but you do need to communicate with them. Older contracts, as from the feedback we're getting, don't tend to have these in, and you do need to go through a process of getting consent from your employees to put them on furlough. So you can't just put them on furlough without them agreeing to the process. If they don't agree to the process, the guidance that we're seeing suggests that at that point you then need to open discussions with the employee or employees around looking at a redundancy process, which presumably might change their mind around the position on being furloughed. Now, Ravi, just to revert to you quickly, what are you currently seeing within the businesses where we're managing cash flow and helping them manage their teams, and what they're doing about approaching furlough?
So I think it's a good question. I think there's two key things that we're looking at quickly. So firstly, we're analysing quite deeply who is essential to the business right now in terms of output and who isn't, and really taking time to be clear on that. And then once we've identified those who aren't essential to the business from an output during this period, being quick to furlough those particular people. And secondly, and this is again to stress your point, John, we're then spending a lot of time on those particular people and looking at their contract. So we're reaching out to incumbent lawyers or HR advisors, the Federation for Small Businesses where possible, and just being really, really clear, what does their contract say, and what we're allowed to do within the scope of that during this period.
Okay, that's interesting. Actually, the key points there I go on to drive home is you don't have to furlough your whole workforce. Okay, so you have got the power to be selective in your business about who and when you furlough individuals. And as Ravi's saying, is so that gives you the power then to do a bit of analysis and figure out, well, if I do need to downsize my team, if I have seen my revenue fall away, my contracts fall away, I need to downsize my team, who can I pick out first that at least attached to generating the revenue that I could produce over this period. So I think Ravi and team have been helping people model that. The other point that's quite important is industry bodies, representative bodies like the FSB, you mentioned the Federation of Small Business. They're producing some excellent material and advice to help people approach from an HR and legal perspective this furlough problem. So if you are part of an industry body, reach out to them. If you're part of the FSB, definitely look at the materials they've got. They're very good at the moment.
Definitely.
Just as we bring this section to a close, a big area of questioning we're getting through is, I'm a director, my spouse might be a director, or at least in the business as well. Can I make them furloughed, or can I furlough myself? Now, the last week we talked about this in quite a lot of detail, saying through informal channels it appears that you can, but the government now have stepped up and they formalised the position on this and have confirmed that directors and their spouses in their business are able to furlough themselves. Okay, now a few things to really point home here. So as a director of a small business, you are likely paid in a mixture of a PAYE salary and probably quite a small PAYE salary, and then a chunk of dividends. Now, that dividend part of what you paid is not part of any of the government schemes that you can get covered for, and it most certainly is not part of the furlough scheme, which covers employed income only. So it's that £6,000 to £10,000 as a director that you're probably taking for the business. Your spouse may be doing the same, so you're taking advantage of both your tax-free allowances and the limit before you pay NI on an employee. So that amount can be put into the scheme if you furlough yourself. So furloughing yourself as a director is ever so slightly than any other employee, because as a director you have statutory fiduciary duties, the things that you need to do legally, otherwise you're going to get into trouble as a director. So these include things as filing your accounts, making sure your taxes are paid, doing various different compliance duties for your business. So as a director, you are still allowed to and encouraged to complete those duties, but what you can't do is contribute to anything that would generate revenue, is the government wording. So you can't be helping manage the operational delivery teams, you can't be doing business development, talking to clients, you can't be operating your social media channels and things like that. You just need to be only focused on those statutory duties which you're legally required to do. Other few points to pull out here. I mentioned earlier the government have now clarified they're going to pay your national insurance contributions as an employer and the pension contributions. And it's worth clarifying as well, when you're paying your employees under the furlough scheme, you're still paying them via PAYE. So it's still being processed through your payroll, you're still delivering them a pay slip, and you're still subtracting the taxes that they need to pay and paying your national insurance contributions on top of that. The government money is coming in to net that off. Okay, so you're getting a cash grant from the company, from the HMRC to cover what you would usually pay out on your wages. So actually, and Ravi, it'd be worth you coming on this point, is because it is a grant covering stuff that you need to pay out, the cash flowing planning of this is very important.
Exactly that. So one of the things, as we touched on earlier, once we're clear about who we're furloughing and how we're doing it and when we're doing it, it then becomes very important to say, okay, well, what does that mean for my cash flow? And as we recall from the call we had a few weeks ago where we ran through the template, one of the things we've been doing is saying, okay, well, actually let's overestimate the time it takes for this money to come in so that we know what a potential shortfall is. But being clear on what that number is sooner rather than later is important.
So actually, what's happening here is a bit of reality of the struggle is hitting home, because businesses are needing to pay out these wages. They've got an obligation to pay their staff at the end of the month, but the government grant to cover that $2,500 or maximum $2,500 against furloughed employees is not yet available. So finding ways to cover that gap, perhaps looking to your bank to get an overdraft or any other form under a loan, form of loan under the CBILS scheme, which we're talking about, could be a good way of filling that gap. Or perhaps if you're retail and high street hospitality leisure, you can make use of your grant that you'll be receiving to cover that.
Yep.
Okay, so just trying to whiz on through now. So we touched on this last week. Employers, you don't have to top up the 20%, but you do need to go through, again, a contractual process, HR process with your staff if you're not going to top up their wage to their full 100% of their wage. But it has been confirmed by various different legal experts out there, and we've seen it that you can do that. Just follow the right process. And we've seen for a while that the minimum that you can furlough people is going to be 3 weeks. I've just touched very quickly on the variable pay. So if you have shift workers in your teams and it's not clear about how much you should pay them, they haven't got a set wage each month, the government scheme allows you to look at the average, it's either the higher of the average of what they earned over the last 12 months or the specific month in the prior year. So if it's March 19, April 19, etc. And if they work less than 12 months, then we can just look back at the average that they have worked so far. So variable 0-hour workers, those types are included by doing this variable pay averaging. Okay, so the self-employed mirror to this. So after the PAYE scheme came out, it was very clear the self-employed part of the workforce needed a similar scheme. So in mirroring that, the government set up a scheme that allowed the self-employed individuals to win a grant from the government equal to 80% of their normal profits, with the same cap of $2,500 for this period of 3 months. Now, the first area of confusion that we get from here is it's profits, not revenue. So profits, remember, is the number you get to after you've received your cash in from your clients, whoever you're working for, you've paid your professional services, your travel expenses and things like that, and it's the number at the end that you end up paying tax on, capped at $2,500. The scheme that sits behind this is being put as a secondary scheme behind the furloughed worker scheme, and HMRC and the government working together are prioritising the furlough scheme at the moment, trying to get that money out. So we've been told, and the government haven't quite reiterated it, but there's been no update on this, in that we're expecting payments under the self-employed scheme to be delivered in around June. And that again will be administered via a portal, and the government via HMRC again will be making use of the self-assessment information they hold to ascertain how much you need to be paid and whether you do indeed qualify. So the underlying message at the moment is there isn't really a lot you can do apart from ensuring your tax return that should have been filed in Jan 31st is now filed. Okay, if it's not filed, if your 1920 tax return has not been filed, sorry, 1819, let's get this right, tax return has not been filed, then you won't qualify for this scheme. So make sure that tax return is in. Just whizzing through some of the qualification criteria here and pointing out the important parts. So remember that self-employment, although it doesn't include dividends, it does include being a member of a partnership. And we know a lot of our clients are in LLPs, so that the profit element that you put in your self-assessment tax return within that partnership is treated as self-employed income, so that will go towards it. You've got to make sure you've lost paid profits due to the crisis. You can't be having a killer year and make the schemes. The government, no doubt, as part of the portal application, will ask you to justify your claim and justify your drop in revenues. And it's a point we're getting a lot of questions around. Well, how can we prove that? How can HMRC ever test that? I presume in the future at some point there will be, as perhaps self-employment checks are made, requests to show documentation supporting why you were able to make an application under this scheme. So any documentation around losing contracts, having to close your business for a period of time, P&L for that period showing income go away, will be vital to keep on record for probably 5 years, I think will be the number. So we've talked about filing a tax return. You need to be trading, so you can't be a business which shut last year and trying to trade under this. And very importantly, your trading profit must have been less than £50,000, or is less than £50,000. So those over that are not going to qualify for the scheme. The government has presumed that if you are earning over £50,000 of profits in a self-employed business, then you're not in the sort of the most at risk pile that they're trying to provide support to. And also that this last point, more than half of your income must be self-employed income. And this generally applies to those that perhaps are moonlighting in their own side gig. Perhaps you work for a construction firm during the week, you're paid under PAYE, and you're doing jobs for friends and family on the weekend and getting paid for that. If that amount is not greater than half of your total earnings, you won't qualify for this scheme. Just to clarify, and I'll keep clarifying as we go through, that what applies to directors, as we're getting lots of questions on that. Directors, you are not, you do not qualify for this scheme, or rather the PAYE and dividend income that you receive do not qualify for the self-employed scheme. So you have to look at the furlough scheme and perhaps in your business under the CBILS loan scheme for help. Okay. The question again, not so many questions on this, but just to clarify, if your trading profits are above 51,000, or the average of your trading profits was above 51,000, you've got the if your 18-19 year was below, but your average was higher, then you do qualify for the scheme. So if you earned perhaps 100,000 in year 1, 100,000 year 2, and then 18-19 year 3, you earned 25,000, you would still qualify for the scheme. Okay, cash grants. quite a straightforward piece from the government. You can get a 10k grant or 25k grant. These are largely, again, focused at the hospitality and retail sector. The 10k grant, there's two ways you can qualify for this. You either qualify for small business rates relief or the rural rates relief, and it doesn't matter what sector you're in, you'll get the 10k grant. If you're slightly bigger and you pay less than 15, or your rateable value is less than 15 grand, you can access this scheme, but you must be on the high street in hospitality, leisure or retail. The 25k grant, the larger grant, is available for those businesses, again, in the leisure, hospitality or retail sector, but your rateable value must fit between 15 and 51k. Ravi, you were mentioning to me earlier in the week that you're starting to see these paid out. Are we seeing that across the board now?
So we've started to, as you might remember, in the cash flow forecast, we were expecting these in and around end of April, beginning of May, but actually we are starting to see some councils pay out, such as Brighton and Hove and Elmbridge in the last week or so. We are starting to see these councils pay out their grants.
Okay, that's great. And presumably in cash flows, though, in cash flow forecasting, you're still keeping, for a lot of them, presuming it's going to be late, just preparing for the worst now.
Exactly. So unless we hear something specific from the council, or unless we hear something specific from the council, I am still forecasting them to be coming in at the end of April, beginning of May. But what we do seem to be happening with Brighton and Hove and Elmbridge is that if things move quicker, they'll just appear in the account rather than necessarily hearing communication from them.
So extra information, new things coming out. So Ravi's mentioned that we're starting to see some of them pay out. I'm not hearing a lot of that yet, but I think I do keep getting good bits of news coming through from different people in our business. What is interesting is that different local authorities seem to be issuing slightly different guidance from each other. So they've clearly been given slightly free rein to apply the definition of who fits within some of the grant criteria. And we have seen, in particular, but it's important for us because we've got a good few estate agent clients and letting agents clients around, that you are eligible, I think, under the schemes that we've looked at, when originally the government guidance was pretty clear: you're not eligible.
Paul McMath said my wife is paid via my PAYE system, but it's not a director, but is a shareholder. Can I furlough her small income?
Yes, so anyone in the business under PAYE, you can furlough. If you're mentioned before, if your spouse is an employee of the business, which is very common under an owner-managed business, you can furlough them and make that claim. Just be careful that your spouse is not contributing to the business in any way at all during that period. And it's probably useful in most cases still to document it, just in case you get tested or checked by HMRC someplace in the future. So even though it's a connected person, your spouse, it might be worthwhile still getting the right letter in place to confirm that they're being made furloughed. And if you presumably you probably don't have an employment contract in place, but still go through the formal process of writing a letter. And again, if you're a member of any of these organizations like the FSB, look at their guidance. It is very, very good and very specific on the HR legals of this now.
So we've got one a bit more specific on partnerships here, but we might choose to come back to it later. From Wayne Barnard: if my business trading profits over 50,000, but have 4 self-employed partners, I take it that the trading profit is divided by 4 and each partner is treated individually.
Good question. So it's a partnership over a year might make £100,000 of taxable profit, and it could have 2 partners, and the partnership agreement says we're going to split the profit 50-50. Okay, and each of those partners then in their self-assessment tax return will have a line saying profits allocated from partnerships, and that'll be £50,000, so 50-50 between them. And it's that number which will either qualify or unqualify you out of the scheme. So not the whole LLP profits, it's each individual partner within that to ascertain, are my self-assessed profits that I'm allocated from the LLP above or below. So look at that number, not at the accounts of your LLP or partnership. Hope that makes sense.
Yeah, perfect. I think we've got some questions around, as expected, from landlords, which we're going to cover later on. I think that just one last sensible question here from Barute is, if we have decided to furlough some of the employees, will we be eligible to join the scheme if we have a healthy bank account, or is it only applicable to certain businesses?
No, so what's really interesting about the furlough scheme, it is open to all UK business, and the business itself doesn't have to make a declaration of whether they are indeed suffering because of COVID-19 or not. The business has just got to make the decision to furlough some workers. And indeed, whether right or wrong, we're seeing some businesses out there taking advantage of the scheme because they have a quiet period, perhaps naturally during this part of the year, to furlough part of the workforce, which they would otherwise not get a good return from over this period. So there is no current criteria as a company around looking at your cash balance or indeed your current trading levels. Okay, great. So let's take some moments then to dive into the coronavirus business interruption loan scheme, or CBILS, as we're calling it around the office. Now, just a few bits on, let's just check on qualification criteria and what it is. Okay, so what is it? So this scheme is where the government have declared that we're going to guarantee 80% of the debt a bank can distribute to certain types of businesses during the crisis. The limit on the loans is going to be 5 million, and they can be structured as term loans, invoice finance, asset finance, and overdraft. So it's not just getting a 12-month loan, 24-month loan, etc. The government also stepped up to state that they're going to cover the interest payments for the first 12 months for all borrowers on the scheme. So an incredibly generous scheme from the outset. The scheme is being administered by an organisation called the British Business Bank, but you can't go to the British Business Bank for a loan. They are distributing the debt via accredited lenders. Now, the scheme it's coordinated by the British Business Bank, and it will be distributed by accredited lenders. Now, the initial lenders that ended up on the list were obviously the big banks, the high street banks, HSBC, NatWest, RBS, etc., plus some of the biggest specialist lenders, Hitachi Finance, etc., that do asset finance or invoice finance. Now, we're our corporate finance and advisory team are particularly well connected with non-bank lenders as well, so we're good at finding debt from not just the main high street banks. And it seems to be those lenders at the moment, so the funding circles and things like that, are not yet accredited, but they're all stating that we're in the process of becoming accredited. What that means in terms of time frame, it's not yet clear, and we can't get any further information directly from those lenders. But I'm presuming we're going to see in time a change where the funding circles, etc., will be able to distribute this debt as well. So qualification criteria, I mean, most businesses that we work with will qualify from this from a turnover perspective. So you have to be below £45 million turnover. If you're above that, there are different schemes available for larger businesses to do with commercial paper and then directly from the Bank of England as well. The businesses going forward to obtain these loans, they must be in distress because of COVID-19, and they must be able to show that via accessing the finance, the lending package, be an overdraft or asset finance for a period of time, they can make their way out of the trouble that they're in. So you have to be able to demonstrate that to the bank and still be a half decent credit risk. Now, if you were a business that was in significant distress before, and particularly if your bank knew that, your likelihood of getting the loan is quite significantly reduced. The banks are not looking to hand out credit where clearly there is no ability for that particular borrower to pay that back. So the application process is really key, and the banks are asking for forecasts and bits of this, and Ravi will jump to that in a few moments. The other question we're getting in a lot, expectedly, relating to CBILS is from our property development and our landlord clients. Now, it's clear that the CBILS scheme was built and structured for financing trading SME businesses to help support employment and the like through the crisis. So there's this added requirement that at least 50% of your turnover must be from a trading, so not an investing, but a trading activity. Now, property developers, technically, from a tax perspective, property development in itself is a trade. It's not an investment activity. However, if you hold property to rent after building it on your balance sheet or within your group perhaps, that is a investing activity. And certainly buy to let portfolios housed within limited companies and like, they are all investing activities, not trading activities. Right, some key updates here that are quite crucial. So this scheme has been, over the last week, massively under fire in the press. The press have picked up and have brought, right to the front of the debate that the small businesses that need this most are not getting access to the debt. The banks are saying no, or the banks asking for ridiculous levels of security to go with the loan. One of the hot topics was the requirement for personal guarantees. Now, the update from last week where we saw some of the banks remove them is now that the government have said that all banks providing debt below 250k, you can't require a personal guarantee, which is great. And for those borrowing more than 250k, only 20% of the loan can be backed by a personal guarantee. And clearly, this is the government saying, hey, we're covering 80%. Personal guarantees can cover the next 20%, but certainly not all of it. So the government really are saying to the banks, hey, in 2008, we had your back. We bailed you out, and we need something back from you now as well. Also, banks can't ask either, I think, as part of your personal guarantee or as formalized security, they can't ask for you to put your home forward, so your principal private residence, which is normally for tax purposes. That's the residence that you'll get 0% capital gains on because it's your home if you sold it. Okay. So what after all of this sort of the debate last week and banks being encouraged and forced probably behind the scenes by the government to step up and actually start approving some of these loans, we've been telling clients, the message is if your bank has said no in the last few weeks, it's definitely worth going back and just trying again. If you've already got an application process that you've taken the time to put together and put forward to your bank, go back to them again now and really push the point that you want to be reassessed following the update in government guidance. Ravi, do you just want to talk us through a little bit around your experience with some of the lenders now, about sort of minimums, maximums, and what banks are tending to do what?
Sure. So I think the minimums haven't really changed too much in that NatWest are the place to go in terms of the bigger high street lenders for the minimums. That is possibly likely to change as more challenger banks and the funding circles and the likes get approved by the British Business Bank. What we have been finding is that, and I think everyone's going to expect this, is that feedback and assessment has been slow. That's to be expected, and so one of the things we have been doing from the outset is obviously taking that into consideration when we consider what money might come in the next few weeks. What we are finding is that despite some slight nuances in application forms, the lenders are predominantly asking for the same set of information, even whether you're one of the larger lenders or one of the smaller ones, one of the smaller partner lenders. The information tends to be the same. And John, you touched on this earlier. The key thing is there's two key questions that they're asking. Firstly, how has the business been affected by COVID-19, and making sure that that's being reflected in the financial information you provide. Mm-hmm. And secondly, what are we doing as a business to help mitigate those issues and mitigate those risks coming up because of COVID-19? And I think what the banks are looking to see, and that's the larger ones and the smaller ones, is are we doing everything we can in our power to help secure the business through this period, and not just waiting for the lending, but rather using the lending as an extra tool in our toolkit to get us through this point in time.
As expected over the last week, as businesses are starting to get their plans together around what they need to do in terms of their capital structure and raising money, a lot of people are reaching out to our advisory and corporate finance team to say, hey, how does helping us raise money work? So I thought we'd just clarify that, and also just clarify how we've reduced and just simplified some pricing for how our advisors can work with you to raise money over this difficult period. So just to be clear, so when you reach out to us and ask us, say, hey, can you help us go out to market and raise 200 grand, £500,000, £1 million. Generally, the scope of that sort of work with our corporate finance team will be initially around working with you as a business owner, potential management team to really scope out and build a capital raising strategy. And part of the key of this is working out what debt you actually need, and how's that to be structured. Is it invoice finance? Is it a term loan? Is it asset finance? Does your business have a lot of free machinery that we think we can go and raise money against? How do the cash flows of those various different debt tools work with your business model? And very importantly as well is finding the best lender that's going to meet your need. Now, what Ravi and a lot of the rest of the corporate finance team have been doing is also mapping out from these accredited lenders who is doing what. So in particular, asking the question of who don't you want to lend to, particularly where there are some lenders that are quite small or quite regionally specific. You've got lenders in there saying, well, we only want to lend to businesses in the Yorkshire area. So knowing this helps give us an advantage to bring that information to you. So you're approaching the best lender you can. And Ravi, actually, I think what you've also been doing with clients is where their banks are saying no, you're finding other lenders that can say yes.
Exactly. So you touched on this point earlier about we've built quite a clear grid for ourselves to understand, okay, what all the various types of lenders, big and small, and what are they offering. And so quite quickly after our initial capital raising strategy call with our clients, what we're saying is, okay, yes, we've got the incumbent lender. It might be Lloyds, it might be NatWest, RBS, HSBC, but what else? Which other lenders might be applicable here? And because the information demonstrably tends to be the same, what we're doing is saying, okay, similarly to other debt raising exercises, we're providing the smaller lenders with that information so that we can get an array of pricing back for our businesses and our clients to then choose the best one.
Okay, good. All right, so it's very interesting. So we can help bring that advantage to you where you're struggling to make these applications yourself. So just to finish off how we help you. So a lot of the lenders are asking for forecasts. The bigger the loan, the more detailed forecast. If you're needing more than 250 and potentially definitely into the 500 grand to the £1 million region, your forecasts need to be relatively sophisticated. It'll be P&L, balance sheet, cash flow type forecast, which we can build for you. What's also very useful is how we collate data in data rooms, and we put together the application and direct that towards the lender and manage the whole process. So just to be really clear, and so you can start understanding how that works fee-wise, we've created a cut and simpler fee structure for helping people in this situation at the moment, and also taking into mind there'll be a lot of people needing a lot smaller loans, but often we're helping people raise quite large loans. So there's a fixed fee for everything up to 50k, and then we're doing tiered pricing between after that. So any amounts between 50 and 250k we charged at 1.5%, and everything beyond 250k 1%. Now, in a usual normal environment, the bank actually ends up helping you meet advisor fees. They pay the advisor some or all of the fee, and we're not sure yet the bank's position on that. So we're talking to various different banks, and there's different opinions on what they can do to help you finance your advisor help during the lending process. But whatever happens, we'll make sure we help you understand the loan size you need to raise to cover any advice that we give or legal advice solicitors give in the process of raising money. Okay, and we'll make sure that we distribute between everyone here the contact details for Ravi, me, and other key people in the corporate finance and advisory team that you can reach out to, and at least just have a call with us to talk about ideas and whether you're going to need help from an advisory team, or you can just go ahead and make these applications yourself. Right, so just as we whiz down now towards the landlord very relevant section, just tick off some of the easiest bits here. So remember that you get business rates holiday if you are a leisure, hospitality and retail business. There's nothing you need to do around this. It is just the holiday will be applied to your bill going forward. I know we've had some questions from landlords around what if I've got a vacant property, does this apply to me? The guidance as we've read it is if your property was vacant prior to the COVID-19 crisis, you will not be eligible for the rates holiday. However, if it has become vacant due to a business closing down or what have you during the crisis, you will be able to access this. And Ravi, before I whiz on too far, have we spotted any questions to do with C bills that are relevant at the moment?
No CBILS questions so far.
Okay.
We did have one question just on the point that you touched upon. If I let's ask that. Latifa asked, as a portfolio landlord, what financial assistance is there to cover lost income due to COVID-19? I have a large number of tenants moving out, mainly students going back home or tenants saying they can't pay. I still have the same cost to cover. I'm aware of the buy-to-let mortgage holiday, but is there anything else? I think you touched on that slightly earlier.
Okay, we are going to tackle that exact part and bring Simon in shortly to do that. So the VAT deferral is very clear, very straightforward. In your quarters ending, the VAT payments you'll need to make over the next 3 months, you can defer to 2021. Now, it is a deferral, remember, and Ravi was pointing out to me earlier, just to make sure in your cash flow planning, to push it out and to make sure that in 2021 that you are putting your liability further down at that end. And the self-assessment tax payments as well, July. If you are, it doesn't matter if you're just self-employed or you make a self-assessment tax return. It's for all those who actually submit and pay tax via self-assessment tax return. Your July on-account payment is being deferred to January.
Okay. Just to stress your point, John, I think even with those businesses where, let's say they've got just enough money to pay their VAT bill, I would suggest to plan properly and hold it to one side rather than just forget about it entirely.
Great. We've got a bit of time now for Q&A. Rosie, do you want to fire them towards us, and I'll dish out between Simon, Ravi, and me?
Sure. So I've got two that are specifically about the landlords. So Simon, we've had one saying from Aruna Patel that she's spoken to the mortgage broker, and yes, these payment holidays are available, but she's saying it could have an effect on her finance in the future because it will be unclassified on their file.
I'm quite surprised at this. I wouldn't suggest you go through a broker to do this process. I suggest you go direct to every mortgage company. 90% of this is done online. When you go through the online process, they make it really clear. Remember, this is a regulated industry, that this is not going against your credit record as a negative. Otherwise, we're getting penalised as landlords, and that's not the intention of the government. So in my experience and my wife's experience of going through this process and talking to others, there's been no negative impact upon your ability to get mortgages downstream as a result of this current season. Because essentially what we're doing is we're saying they're giving you a mortgage holiday on payments, but you actually are going to pay that 3 months, but you're going to pay it over the rest of the mortgage by increased payments over a period of time. So the mortgage company's not out. It has improved your cash flow short term, and you've been given a holiday. So I'm expecting no negative impact whatsoever. And I'd recommend you go direct to the bank, because you'll see it for your own eyes as you're going through the process. They make it quite clear that this is not a negative thing at all.
Okay. And John, we had a question that came in earlier. It's been resubmitted. So for the furlough workers, Joe was asking, does this cover caring for dependents? You said there's been a new addition to the policy.
Sorry, so is that if the business is a caring business, or can I furlough someone so they can care for their dependents?
It says, do you have any information on the furlough scheme for caring for dependents?
Okay, so I'll make some presumptions here. So I'm presuming that perhaps you or your teams can't continue to contribute in their role because they now have children who are not in school, or they've got elderly relatives that they're trying to care for at the moment, and they can't fulfil their role. And that might mean then you're looking at this individual as someone who could be a good candidate to furlough. Now, it doesn't, so that individual can absolutely do that caring behind the scenes or while they're furloughed, but you don't have that doesn't need to be a reason to furlough someone. It's up to you entirely as the employer to decide who to furlough and not to furlough. And if you're furloughing someone because actually it's better for them to take time off to look after their dependents, that's fine. There's nothing in the scheme that would disallow you to do that or unqualify that individual from doing that. But remember that a furloughed worker is absolutely absent from work, so it's not, you can't furlough someone for 3 days a week to contribute to caring for their dependents or what have you, and then work 2 days a week. They would have to be furloughed full time.
Okay. And we have a question from Michael, who's saying that he doesn't have business premises because they work off mobile vans, but he still has high outgoings with the van's insurance. Is he covered in the government grant scheme?
So if you don't pay business rates, then you won't qualify for the grant schemes. The grant scheme is specifically looking at ways of using business rates as a mechanism and the local councils as a mechanism to distribute those grant schemes. So if you don't have a fixed place of work, so you work from mobile vans, you won't qualify for the grant schemes. You'd have to instead look at the CBILS loans, and if you've got obviously finance behind your vans and what have you, looking to your financier behind that to provide you with a capital holiday. And Ravi, you're saying banks offer capital holidays on business loans across the board, right?
Yes, exactly. And I think we are seeing that across a variety of different assets, whether it's machinery to manufacturing business or vehicles, if you're a car salesperson, or in fact, if you're a delivery business. I think, John, just to stress on your point, I think whilst, yes, these grants are available and relatively decent in size, it's not the only support being provided by the government, like you touched upon with the VAT and self-assessment. So the key thing is to look at all the variety of support and see how it does impact you, not just whether you're due a £10,000 or £25,000 cash grant.
Okay, great. Just before we go to the next question as well, I've had one of my colleagues just confirm on that furloughed workers with care and responsibilities. The government have actually written into the guidance saying specifically that if you have employees within your workforce that can't come to work because of these care and responsibilities, you should be looking to furlough them. Okay.
Okay, and we have a question again about the furlough workers in this 3-week period. So Paul is saying, if I have furloughed staff, can they come back to work after 3 weeks for a short period, then be furloughed again if the work dries up? Are there any problems around it?
There doesn't seem at the moment any guidance you can't re-furlough workers, but you just had to be careful that, remember that the scheme is only 3 months long and you have a minimum of 3 weeks. So you need to be careful not to go over the end of the 3 months or presume that it's going to go on earlier. I mentioned earlier that in all the cash planning that Ravi myself are doing with businesses, we are absolutely not presuming in cash flow forecasts that you will get access to the furlough scheme beyond the end of June, May, sorry, end of May.
Yeah, May, yep.
Okay, and then
but you can switch on and off.
Sorry, good. So Claire has sent in a question off what you just said there. She says, we are an SME and have business premises but don't pay rates. Are they eligible?
So if you don't pay rates, presumably you'll be under the small business rates relief scheme. Okay, so we'll leave that off. So if you get, so the 10K grant is available for those businesses that do get the small business rates relief, so don't pay business rates. Then you should get the 10K grant, and you should be talking to if you haven't received that yet or haven't received a letter from your council saying we think that you qualify, here's some cash, then you should be writing or calling your local council to apply. But you must, if you don't pay business rates, you're likely then to be under the small business rates relief scheme.
Okay, I think we're done there, John. So we've gone a bit over time. So people were asking if we're sharing the slides afterwards. Yes, I'll be sharing the slides and the recording with everybody just shortly by email, and also invitations to the next webinars that we're running.
Excellent. Thank you very much.